Thank you very much, Katerina. Good morning. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. This is me, Alberto Alvarado. Subscribe to my YouTube channel in any case you haven't done so. In the search box in YouTube, you type iiivb's training room channel. This will show up and you click subscribe. Today is Tuesday, February the 7th, 2017. Here my local time is 1 a.m., 11 minutes past the hour. 7 a.m., 11 minutes past the hour GMT time. And I insist that I must find this plush for my collection. Actually, I don't collect Marios. This would be the first one. But I like these guys, raccoon. So yeah, in any case, somebody wanted to send me a gift. You could send me some $100,000, and with that I could buy this among other things. So, I believe it's time to start. Again, welcome Katerina, welcome Xenia. Shulaeva, you said? Your second name? Your surname? Shulaeva. And all the guests. Well, today is going to be a review day. I really have important information to share as for educational purposes, because apparently I will be able to this week overcome all the losses in the trader contest. And as you remember, yesterday I was saying that was my first and most important goal, is to close it at least with no losses, to have no in detriment of my Grand Prix performance in the Grand Prix contest. But well, now of course I'm still in the negative. As you can see here, we started with $100,000. I am 82.6 in the 388th place. And well, you can check that this is me. Let's go quickly through this, because we have some important things to review that are precisely related to trading, and using this as example. As you can see here, this is the monthly performance. You can see, well, I just got pretty much to the 50% of drawdown. For some reason, here is only registered for 40% of maximum drawdown. I don't know why. And well, this is the latest, my latest trade performance, and just helped me to overcome 3/4 of the loss. We will review that. I commented that trade yesterday. The trade the only one that I have opened yesterday on my trading account, and the reasons why I opened it, and we will review why I decided, and it ended up being correct. This is my 6-month performance. You can see here, still have 58%, barely above the 60% maximum drawdown allowable for the 6-month Grand Prix contest. And here is my equity curve last month and this latest one. So what you can see here, it doesn't look pretty bad. Yeah, this is the 6 months, and the average profitability every month is 68% when you count the latest 6 months. This is the yearly, the one that it will take me way harder to overcome this 70% of average drawdown. But well, here at least it's in profit with 9% of profitability, so that is good. So I will continue trying to get better with that. It's important that that I comment the trade and the reasons why I kept it open, even though a lot of people consider that trade to be in the inverse most likely direction, but according to my analysis, that was not the case. Actually, we had some hours ago the Royal Bank of Australia rate decision. They decided to keep the rates exactly as they were, but apparently after having the speech of the Royal Bank, apparently the traders and investors got a little bit disappointed because the dovish comments from the Royal Bank of Australia. But guess what? That had a positive effect on New Zealand dollar. Usually you could expect those movements to be in tandem because overall the New Zealand dollar is of course a weaker economy in comparison to the Australian one. I commented yesterday that we could even expect that after having the weekly breakout of the trend lines that I signaled yesterday in the webinar, that we could actually find that maybe you could have majors dropping, United States dollar going up, but maybe the exception could be the New Zealand dollar, and that is exactly what happened. So we're going to review that. This is a post that I commented, was posted 2 days before, 5 of February, when I was commenting that this was a confirmation of the bullish potential movement on New Zealand dollar that I was looking for. The first one was posted February 4th, and it was a descending channel that was broken to the upside during the last 2 weeks. So, well, when we started this week, we had this broadening rising wedge that is having a confirmation for the ones that decided to believe that the New Zealand dollar outlook is to the upside. This was a confirmation signal. That is my case because I was a bull on New Zealand dollar versus the United States dollar. So, well, apparently the reading that I made was correct. So this is only the review of the post of February 5th. And these are the ones that I just posted in the Traders blog. Wait a second. I need to silence my phone. Okay, here it is. So, well, I was today, before the Asian session, I posted these two ones on Euro dollar and Australian dollar. Okay. So, well, now I will read out loud what I wrote in the Australian dollar, the 1 hour outlook. We had a rectangle, and here it says the Aussie rectangle is a major pattern to be respected for the next days. Although we had weaker than expected retail sales number and the risks to the downside increased amidst major time frame directions, the time frame direction fading away and intraday text pointing to the downside, still the daily shows some possibilities to the upside. Remember to use this chartist pattern levels as aid to protect your trades with realistic stop losses, meaning that if, for example, you decided to go long, maybe putting a stop loss below this low was a good idea, or in the inverse, if you decide to go short, maybe some pips above this level would be more than good enough. Of course, I was commenting that here major time frames direction was fading away, and some intradays were showing bearish possibilities. But since the daily one was the one that could be pointing a little bit more bullishness, in any case that somebody wanted to short this, the most recommendable thing is just to wait maybe 1 more day, 2 more days, because we shouldn't rule out the influence of the daily charts. The daily chart is, of course, for logic, one of the most important, if not the most important, for swing traders and even position traders. So if you want to go against the daily, you need to know that you are going against people that usually take their times during several days, and during several different market circumstances they buy at different prices. So that means that they are not they wouldn't be happy just to let the market to put them in red just because of whatever. So what you can expect of this kind of players is that they could fight back the any bearish movement just to protect their position. So the larger the time frame you're watching, that is why I always say you need to have the context before opening a trade, because only with that you know exactly whom you're fighting with, and whom you're fighting at is not the same thing. You can be fighting with somebody at something, or you can be fighting at something. So here you need to know exactly who are the ones in your team, in the same side of your team. If you have the daily players going against you, well, you should beware, because you can expect to have a very aggressive movement to the upside, for example. And maybe if you were misfooted, maybe it's just a good idea to play it safer. The usual way you play the rectangles is that since this is symmetric, there is a no-brainer point of stop loss to the bears and stop loss to the bulls just below these levels. At the moment of this post, well, I don't remember exactly where it was, but well, now it's here, just at the middle. So we are in no man's land. And I can be very sure that this is due to the fact that the daily players, in any case that they want to prevail their positions, they will fight to preserve the bullish momentum, or in any case that maybe the Royal Bank of Australia statement really disappointed them, maybe what they will try to do is to disguise how they get rid of their bullish positions gradually. Okay, so maybe, for example, that could explain this huge candle to the upside, and maybe the bulls could start getting rid of their bullish positions here. Just at the moment, maybe some people could start believing that we should see a continuation to the upsides. Overall, because now the Kiwi, the New Zealand dollar against the United States dollar, is playing it it's in its best shape to the upside. So that could confuse some traders, that maybe they could be watching the New Zealand dollar chart, and maybe they could believe that the one lagging is the Australian dollar. It's just a matter of time that it could go higher. But again, the daily players are, at least the technicals, are still pointing somewhat to the upside. So well, and besides that, that makes sense why the most reliable chart is pattern now is a rectangle. That it's precisely the very clear symmetric equilibrium between bears and bulls. Okay, so well, you really need to have this in context. Here is pretty much a coin flip if you decide to go long or short, because you are in the middle of everything, and you have the same risks to the upside and downside. So yeah, it depends. Now, when you have this certain configuration, you rely on your fundamental readings and your very personal edge to try to tune your intuition to more or less figure out where the market could be next. Okay. And the other post was the euro dollar for our outlook. We have I was making a resume of what happened yesterday, and at the beginning of the Asian session I typed, today's obvious major news in April's French presidential career, where Marine Le Pen represents the anti-EU sentiment that could lead to another division in Europe. In any case, this woman wins, makes an EU referendum in France, and ends up asking for a EU withdrawal, same as the UK. This explains the current weakness in euro, and in any case, in the next future, in fact, France triggers Article 50 also, we could expect a massive sell-off cable-like. The same kind of sell-off that we had after UK, after Brexit. In any case, that maybe France does the same. We could expect just pretty much the same reaction. And in my opinion, France, in opposition to the UK, indeed relies much more on the EU than UK does. So Brexit, for me, would drop euro dollar below parity almost immediately. So If it was not enough, Donald Trump's inherent risks because of all the things that he does and he makes, now we have to consider a serious risk of having a huge sell-off below parity on euro. In any case, Marine Le Pen wins, and then it comes the referendum, and you could have maybe France trigger an Article 50 also. That is not good because that put us in a very delicate situation. We need to understand that I've been saying this during a lot of webinars. Since Grexit failed, the Greek exit of the EU, thanks to Angela Merkel, I said that that was the end of the EU credibility as a business plan. Months after, I believe, or 6 months after, I really don't know, 1 year, I don't know, Brexit happened. But I've been always saying that the UK was leaving the EU maybe one of the best shapes possible. Not perfect, but showing off real strength of its economy. And I was commenting since Brexit happened that in any case, any other country in Euro mainland decided to go to trigger Article 50 also, the result could be the complete opposite. Because in order to leave the EU, you really need to be strong enough to sustain the fight. Because I really don't know in percentages how much the pound has devaluated. But imagine having that in the euro. Of course, that would be a massive tsunami, a massive earthquake in the whole Euroland. And I honestly believe that if France leaves, it's the end of euro. I strongly believe that, because it will be very difficult, because first of all, we will have a very unpredictable crisis in France economically that will spread through whole Euro mainland. And we need to remember that Italy is in a very fragile financial situation. So you really don't need a tsunami over the Italian economy because of Brexit, because that would then trigger another crisis then in Italy, and it will be a chain reaction. I honestly cannot think of other country in the EU, except of course Germany, that could maybe confront this kind of chain reaction with some kind of a strength. But yeah, I am very no, I'm not going to say worried, because that is not the real word. The thing is that if this woman gets into power, it will be way easier to convince the voters in France to do the same thing that happened in the UK. The thing is that I believe, and I still believe, that thanks to the lack of leadership, real leadership in the EU, and the best evidence of that is that you can check the news and realize that again, Angela Merkel is going to run again for being elected in Germany again. So you really cannot expect any kind of change when you have the very same people doing the very same stuff. If you want to really have a second chance for the Eurozone as a business zone, you really need new people that believe in the EU, of course, but new ideas, new blood, fresh blood. But in this case, apparently Angela Merkel is not willing to lose the grip on the power. And that will be, in my opinion, defuncting a lot the idea of the EU. So if we have a Brexit trigger, I wouldn't be surprised most part of the Euro members just to say, you know what, that's it. And that will cause a massive disruption in the markets, of course, for obvious reasons. And that will be the next financial crisis. So yeah, we need to be very Consider this overall risk, this strategic risk that will be increasingly considered by the markets during the next months, and factor that into our trading, because let's remember that having a huge gap because of after a referendum in France or during the French elections, etc., those kind of gaps could be simply massive, like the one in the Euro Swiss franc that actually put in bankrupt a very famous and old broker in the UK. That happened, so we really need to be very careful on the trades that we have opened, and diversify. If you have money in Europe, in any case, maybe to diversify it, maybe to have some money in your local country, and maybe to move a part in Germany, another part in Switzerland, just to have more chances that in any case, if Europe goes in flames, because this is the sad thing. The problem with the UK, with Brexit, is that everybody was saying that that was going to be the end of the UK as we know it, in a bad way. I never bought that idea, because I always trusted, because of things that were happening. Overall, after the lack of Brexit, a lot of things started happening in the UK that boosted me the confidence in the UK again. But the thing is that if France goes out of the EU, it will be dismantled. I mean, the UK, even, maybe this sounds ridiculous, but it's true. They use a different, they don't use decimals. They use their English way to measure things. They drive by the left. So they have always historically been like aside, like we're not the same, like trying to be different. So maybe this made the UK going out of the EU after giving and giving and giving again and again chances to the EU to demonstrate that actually is something that works as a business plan. And when finally it was evident that Angela Merkel simply has no idea how to put this into work, the first ones to leave were the UK, so that makes sense. But France, I believe, there is a very, I've been saying that there's a very different in-depth reasons for UK leaving EU than, for example, having elected Donald Trump, trying to isolate the US in order to maybe protect the American economy. But the speech and the language and the logic behind Marine Le Pen, it's very close to the logic of Donald Trump. So it will be very different kind of exit. The Brexit and the Frexit, even though are the same at the end, everything before it's completely different. And that will spread like a disease in mainland Europe. The UK is not selling the idea of the EU is a failed plan. They made their best to sell the idea that is in their best interest to have the EU working, but that they simply decide to go in another direction. But the whole speech of Marine Le Pen is the complete opposite. Is EU is a disaster, should disappear, blah, 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 blah. And that could spread widely like a wildfire. So yeah, just gradually put strategically maybe your money, if you have savings, maybe to move them to Switzerland, half of it. It could be a good idea. Okay. And let me load. Hey Janice, how are you doing? Good morning. Okay, let me show you what that has happened to my account and why I was saying that I was really sad of having the margin call that I didn't expect it on Friday, because in any case I wouldn't have been closed out. I could have would have could have the chance to manage the trades in a way that maybe instead of now being in the fight of rebuilding my account to break even, I would be in profit, very decent profit so far. I will show you why. One of the trades that I had opened, the one that actually was completely wrong, was a bullish trade, as you can see here, in the in the GEPI, in the pound versus the Japanese yen. You can see here that I opened a bullish trade, and it was closed at 18 hours at the leverage shortage at Dukascopy Europe on Friday. So as you can see here, the trade was closed in loss and it continued moving down. Okay, so in this case, it would have been easier for me. In any case, imagine that I didn't have that closeout on Friday, maybe on Monday. Of course, if I saw the market retesting these lows, that is outside this line, of course I would have closed it. So well, maybe this one being closed out couldn't have been a bad idea. But the thing that I was explaining yesterday is that idea that I had on Friday before realizing that my positions were already closed was trying to decide which one to close. And I maybe would have decided to close the one that it was most in a loss. And in that case, I would have closed exactly that, the GEPI trade. But this is what this is my recent trade. This is what really upset me. I opened a short trade here in Euro Pound, and well, it ended up moving up. This is the hourly chart, but now I would be like in break even. So I was saying yesterday that I would have let the market, the trades to flow to see how they behaved on Monday, because usually on Monday you have, yeah. Who's asking? Yes, Janice. This is a trade, a short one. I was barely in profit. Then we have non-farm payroll moved up or whatever. They moved then down at break-even level, exactly here. So if I had if my positions weren't hadn't been closed by the margin call, maybe I would have considered closing them in this level, because it was the 86. So since the market broke convincingly during some time above this line, this double bottom line, maybe I would have gotten out of the trade at some moment here or here. So as you can see, I would have reduced a lot my losses. But look where I opened here and it was closed here. And since this is Euro Pound, it's pretty much the double of the value of every pip in dollar value. This was like closed in 20 pip, so the actual value in United States dollar would be like 40-45 pip. So this really hurt me. This trade actually hurt me a lot. But in the other hand, the euro would have been performing great. I shorted here, I have the margin close here, but look where it is now, at a psychological 107. So the winning here would have outperformed the losses, and at least I would be already at break even, at least. But well, now I am fighting to put my trading account. Oh really? Well, even better, imagine. Well, but what I was explaining yesterday is that this kind of stuff happens in some way, in some way or another. Trading is not, since it's like the Wild West of trading, we need to get used that things sooner or later won't happen the way we want it, because maybe the stop loss was not triggered, we have a margin call, we had huge widenings of the spreads, etc. So yeah, at times we simply need to know how to handle this stuff. So yeah, this would have been a very good one. But well, I will have to be much more cautious I know now. I know that the shortage of the Dukascopy leverage is done at 18 hours GMT time. Now I know it, so it's a good thing, and I need to pay more attention next time. And this is the one that I was commenting. I don't know. Let me see if I can have an update here because I don't like this red candle. Just give me a second. Let me check exactly what the New Zealand dollar is now. Well, if I'm not wrong, it's at, oops. I don't know if this chart is accurate. Yes, it's at 73.27. So yeah, it's even lower. It's like here. But well, what I did like, and I was commenting yesterday, that why I kept this bullish trade open, that you can see that I open it here, is because the overall outlook, when the post that I put in the traders blog on that descending channel in the weekly chart, in the kiwi being broken during 2 weeks, and then at the very beginning of the week in the 4-hour chart having this kiwi ascending channel, it's like for the ones that are bullish, these are the kinds of things that you want to see in your trades, because you know that you are not actually fighting an overall trend. That doesn't mean that maybe the market won't retrace here, for example. Of course, that could happen. But watching all the structure of the movement, that 2-week breakout that happened, and then having this very good-looking bullish movement, I could have taken profits here, for example. But it would have been a very mild profit. So I had to take the decision whether I take the profits there or I let them run to at least the 0.74. Yesterday, reaching the 0.74 was even more difficult, but now, since we have this ascending channel, it's way easier that we get to the 74. You can see it here. It's not unrealistic. So yeah, I decided to keep that trade open and let it float, and to wait and be patient. Why? Because of course, if you are seeing your price almost hitting your take profit here, and after retesting this very important resistance, the market doing this is natural. When this happens, you need to visualize yourself, visualize your trade that this could happen. Why? Because that will help you to have a cool mind, a cold mind, and not panicking, because this is normal. This doesn't mean that this will continue going down. Of course, we have those risks because the markets love when they make a breakout to make it a fake breakout, and then you have massive players betting against that breakout, and then you have that typical configuration 50% of the times of failed breakouts. But in this case, I believe that we have fundamental reasons to believe that this will continue going up. Maybe this take profit target could be hit tomorrow or the day after tomorrow. All depends on how it happens. Of course, if I see the market retrace to my entry price and maybe it does some strange things, maybe I will just wait for the market to retrace and to close it at break even. And yeah, why I decided not to close it here, because since the way I'm watching the markets now is a way that maybe I wouldn't be wanting to open a lot of positions. So if I was lucky enough to be in a correct trade, in the correct breakout direction, maybe if I want, my objective is trying to overcome all the losses of my account, and maybe this is my best shot. Maybe trying to find a shorting, for example, the euro dollar after the sell-off now, it wouldn't make sense. it would be running even higher risks than keeping a long trade here. Of course, the risk off mode could be more active today than yesterday because of the euro thing. But we need to remember how Brexit played in the markets. It was not just after the confirmation of the referendum result that actually the markets really reacted widely. And that is what I expect now to happen. Since now the polls have shown to be deficient and not perfect, and they are actually not meant to be perfect, but for some reason before Brexit, there were people that considered that they could not be wrong. Of course, any kind of human thing is not flawless. So what I believe is that no matter how many polls you receive from France, actually the result at the very end will be decided at the very end. Because in France there is a huge division, again, more or less 50-50, for the ones that want to continue inside the EU and the ones that want to go outside the EU. So I don't think that the markets will enter into panic mode until maybe that very same day of the elections. So it's the same thing that happened with Donald Trump. A lot of players were worried about this guy wanting to experiment into an economic field that maybe he's not very good at. But the markets really didn't panic until it was the right time. So I expect that to happen. So maybe this is only transitory. So I really believe that in the next days, this trade could get to its take profit target. Why? The New Zealand dollar is usually less volatile than the rest. So that gives you the chance that in any case this goes wrong, that you could maybe get out of this trade at break even without being worried about the huge volatility on New Zealand dollar. So that is why we'll keep this trade open. If I'm not wrong with my calculations, this trade would put me in break even. So I would be like last contest. In the last contest, I started the trading competition after 1 week. It had started. So maybe I would be repeating that again. So yeah, I am not interested into pushing the things. I had to take the decision whether to close the trade here or not. I decided to let it run. So I need to see what happens. I still sustain that the major time frames like the weekly, like the dailies, the breakout in the weekly, the candlestick denial chart patterns in the weeklies. Now in the 4 hours we have this ascending channel, that this has a in-depth reason to keep the bullish momentum here. Again, there's an alternative explanation for that. A lot of millionaires, maybe not billionaires, but a lot of millionaires are moving to New Zealand, I believe, for the last 2 years. Because of the tensions of the Russia, etc., there is the misbelief that in New Zealand could be like a place where radiation won't get. That's a lie, that's not true. For the only reason that Australia is an ally of, it could be considered an enemy by Russia in any case of a confrontation between the NATO and Russia. Australia wouldn't be in the white list for Russia. There are several nuclear attack scenarios, and in everywhere they are targeted. Australia. Not New Zealand, but Australia. So yeah, if something happens in Australia, it will hit New Zealand. And besides, New Zealand is like living just on the San Andreas earthquake line. In New Zealand, the probabilities of having a natural disaster because of earthquakes are really high in comparison to other places. So it's not a safe place. But the idea is that humans are emotional. We are emotional. And if we feel safe, it's irrelevant if we are or not safe. The thing is that we want to feel safe. And people tend to believe that in New Zealand, they are safer. So, sooner or later, they will start investing in New Zealand. So yeah, this could bring prosperity at some measure for the New Zealand economy. So as an indirect reaction, betting for a longer term bullish trend in New Zealand dollar makes sense. We have a comment here. Janice says it is also a supplier of uranium. New Zealand is a supplier of uranium, or you mean Australia? Australia, yeah. They are like a huge mine. They have a lot of things there. So yeah, it would be like a very first target, a first priority target for any kind of confrontation. So yeah, the ones that believe that New Zealand is safe, they are wrong. But well, it's creating hype, right? Of course, there are a lot of interests for trying to populate maybe some parts of New Zealand with millionaires, and they're not going to tell them it's even more dangerous to live here than maybe in the very United States, right? So, well, but that's the way we humans work. Too bad that they just kept digging, so they are addicted to their buyers. Yeah, I'm not very familiar with the Australian economy. I believe that they are a sophisticated economy, but as you say, they rely way too much in mining. I mean, they are the first suppliers of coal to China. So if China goes bankrupt, or let's use that word, the next one to go bankrupt is Australia. So yeah, it's I don't know. I've never been there, but I believe that there are a lot of zones there. If I'm not wrong, that they don't have a lot of population. So maybe they say, well, the only thing is to dig and to grab the things inside the soil, because anyways here nobody wants to come and live and harvest the land or something. I really don't know. It says a mine, as you said, yeah. It's I find fascinating Australia. But yeah, I believe that the only very sophisticated zones are, of course, the coasts, the rich ones, Sydney. I believe they call it the Gold Coast in Australia, where they have the financial markets, etc., are the most evolved and sophisticated part of the economy in Australia. But besides that, it's, I don't know, maybe agriculture, mining, a lot of empty places. So yeah, maybe it's not the smartest strategy, but being the closest supplier to China maybe makes it look intelligent. But well, betting everything, 80% of your trade with a single country, I would just invite the Australian authorities to look the situation of Mexico. They need to diversify urgently, because China is not precisely wanting to spoil Australia, right? But the thing is that if we have a contraction of Chinese economy, the Australia will simply go in recession. But well, I don't make monetary policy, and for some reason I am sure that they don't, as for my opinion. So well, I believe it's time to call it a webinar. Let me just check again the New Zealand dollar. If this chart is right. Now we are exactly at, let me tell you, 0.7327. So that would be like here. But you can see the market retrace here, and apparently it's trying to make a bottom here, more or less. So it would only take for the market to oscillate here, and maybe here could start jumping again, because we don't have really any kind of reason to start shorting this. At least not for the next week. I don't see clear reasons to stop the movement. Maybe at this psychological level, you could have the latest balls, closing the remaining trades, and maybe you could have a massive sell-off to the maybe to the 73 or even the 72, retesting that major descending line of that weekly pattern that it's already broken. But well, we need to wait and see, and to have precaution. My stop loss, I will let it the exact same position as you can see here. I was considering in this. Maybe I could put it above, but I'm not sure. I need to make a another analysis in the lower time frames, not the 4-hour. Maybe to, but well, what can I tell you? It's at 72.40. Maybe I could put it at 72.55. So maybe it's not that much the pips that I could adjust in my favor for the stop loss. So I would like to thank everybody for showing up. I am happy to see that I have David or David from Italy. This is next, I believe. I hope that we have better sound than yesterday, because yesterday I believe that we had some sound troubles with the microphone. It happens. I remember when I was starting broadcasting here, I had that very same problem, so don't worry. It's just a matter of getting used to the platform. Okay, thanks, Janice. Yes, yes, but yesterday apparently David had some microphone problems, something like that. And no, you don't have to be thankful, David. It's very good to see new people, new broadcasters here in Dukascopy television. So it's time to go. Thanks, Janice. Thanks, Xenia Chulaeva. Thanks, Katerina. Thanks, David. Thanks, all the guests. And remember that I expect you tomorrow at the same time, the same place. This is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.